Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and as you can see in the studio, we have the management of Welspun Corp who's with us. Mr. Mathur joins in to detail the order win that you won earlier this morning and also tell us about how business is shaping up. But thanks a lot, Mr. Mathur, for coming down. First, let's focus on the US business because that's been the missing piece in this financial year. However, the next 2 years is going to belong to the US business because the kind of order wins that you've got. So give us two details. One is you keep mentioning in your press release that you have a good amount of market share. So what is the market share that you have in the US business, point number one? And also if you could tell us how does execution play out in the next couple of years with regard to the US business?
Good morning, Nigel. Thank you very much for having me on the show. This new order win in the US has been very significant. And if you would see that from October, since October of 24 and between Feb of this year, we have been fairly successful. Our run rate has been fairly impressive. And all put together, we have now an order book close to $1.2 billion in US. And we would see that, the execution of that would all happen in the next, in the coming 2 financial years. So the next 8 to 10 quarters are looking extremely promising from a US perspective.
So you're booked out for the next 8 to 10 quarters. That should be the case.
That's correct.
Give us a couple of numbers. Market share. What is it in the US?
So today we are one of the largest, we are the largest player in the US market. I think so we are absolutely in a pole position. Probably our market share would be anything between close to 25 to 30% of the market share we currently enjoy in the US market. Okay.
All right. The other fear is since you're in the US, but your raw material could be coming in from outside. I speak to the manager of Hindalco and various steel companies as well. US imports some part of their raw material. Now, President Trump is talking about putting tariffs. So you all could be a beneficiary of drill, baby, drill, but the input cost could go up. Is that a pass-through?
See, there is a discussion of tariffs which is happening. Tariffs will get crystallized sometimes between 4th of March to 12th of March. And there will be various tariffs across all the countries. So we'll have to see as to what type of tariffs which are going to come up. That's one. Secondly, in any case, contractually, we are fairly completely insulated in terms of any increase on account of tariff. So I don't think so that, we are seeing any risk at this point in time.
All right, so that's positive, no risk out there. I'm looking at your 9-month numbers, looking at the guidance that you had given for FY25 as well. On the EBITDA front, you have done a decent-ish sort of performance, 1350 crores for the first 9 months, as against your guidance of 1700 crores. For the first 9 months on the top line, you've done 10,000 crores. Your guidance was close to around 17,000 crores. So where do you end this year with? That's point number one. And because of the execution that you've lined up in the US, etc., what does revenue growth and margin look like for the next couple of years?
So let's not focus on the top line, because top line is also a factor of the steel pricing and all that stuff. I think so if you look from an EBITDA perspective, I think so 9 months have been a very strong performance. And I am very confident that the quarter 4 is even going to be even better than what we have seen in Q3. So in any case, we are going to exceed the guidance what we would have
By
given.
how much?
I think so it will be significantly higher. So
define significant. Is it going to be like 2,000 crores, 2,100 crores?
We are just 45 days away, so you will come to know about it. But then, in any case, the Q4 performance is going to be much more stronger than that of Q3, and I can, that's very much on the track. And going forward, I think so with this order visibility of US for next 8 to 10 quarters, and then our Saudi business being booked for almost 2.5 years, with our DIP business, being also booked for more than a year, and then also our signature longitudinal pipe business also being booked for more than a year, and also the Indian economy now also coming back onto the track, and the orders inflow started coming in. I think so the next 2 years are going to be very interesting and defining years for Welspun Corp.
Over 20% growth?
We are definitely looking at something, we are looking at least a 15% to 20% CAGR growth. That's what we are aiming at this point in time. And we are confident that we should be able to achieve something close to that.
That will be conservative, right? Because currently on a quarterly basis, you're doing close to around 400 crores. That's without any contribution coming in from the US business. Now, given that the US business is booked out, I think you said $1.2 billion, back of an envelope suggests that on an annual basis, the US business itself will be able to contribute maybe $80 to $100 million, very roughly, to the EBITDA numbers, which should mean close to around 200 crores per quarter. So should we be looking at, in the next 3 years, the EBITDA number that you've delivered this year, which will be around 1,700 crores according to your calculations, should it double in the next 3 years? Is that a potential number we could work with?
What we should be looking at is that we should definitely be looking at close to 1.5x at this point in time from the current EBITDA numbers. That's what we are striving, and I'm sure that is something which is achievable. As we go through into the next 8 quarters, we'll see that, how they can further be improved. But I think so conservatively we can definitely
So number
look
closer to 3,000 crores in the next 3 years?
that should be a fair estimate to keep in mind. Yes.
Got it. And what about Syntex? While overall the revenues don't matter as much because it's commodity linked, Syntex FY24 635 crores. You're looking to scale that up, getting into the plastic pipes business as well. What's the prognosis from here, from Syntex and a plastic pipe business over the next couple of years?
So Syntex, if you look at it, we are absolutely on track in terms of our water tank business, number one. But what we are also growing exponentially is our polymer pipe business. And I'm sure that the next 2 years, the 27 and 28, we will see the maximum benefits coming in Syntex in FY 27 and 28, because by that time those business would have matured and they would have ramped up, and we will see a significant impact coming in our bottom line from Syntex.
So what's the target here?
We are evolved. See, we have just got into the pipe business. We will be launching the pipe business in the very first quarter of this particular year. I think so. We have to see that what type of market share we're going to get it, how is the market going to accept it. There's a lot of work in progress at this point in time, but we feel very, very confident about this intervention, what we are doing there.
One final question before we let you go, Mr. Mathur, the debt number, because you have great ambitions. The Syntex capex spend should come up for you, which you have lined up for the next few years. What should the debt number look like? Because you need to be very, very cautious out here. You're putting on big capacity. You're saying that you're booked out, which is good. But what should the debt number look like at peak levels?
See, Nigel, if you look at it, we have been very, very prudent in terms of our financial discipline. We are very clear, this debt, what we have, and whatever capex we have announced, that capex is over next 3 years' time. It is not going to happen on 1 year time, number one. Internally, we have kept a very clear threshold that our net debt to EBITDA or the capex will never go beyond 0.5. So that's the threshold internally we have as against our EBITDA. The debt is never going to exceed 0.5x.
Okay.
So that's the guidelines we have internally kept, and I'm sure that we will be able to manage our debt accordingly.
If we're looking at a 3,000 crore EBITDA, say in the next couple of years, your debt will not exceed 1,500 crores.
That's pretty much. That's pretty much.
Okay, all right, Mr. Mathur. We appreciate you coming down and giving us all of those details. We look forward to being in touch. And in fact, we'll track all the numbers that have given us. 3,000 crores of EBITDA in the next 3 years, with potential debt peaking out at around 1,500 crores or thereabouts. And heartening to hear for the industry that the Jal Jeevan mission is, progressing, which will be encouraging for DI pipe makers.
Which is very, very encouraging news. Very, very. And, if you see the government also saying, bringing in the clarity that it is there till 2028. So that I think so they have brought in a long-term perspective at this point in time.
Indeed. Encouraging for the industry on the whole as well, and for you as well. By the